Welcome to the Real Estate Baller Show. If you ever like any of the video we posted, if you like this channel, can you do me a favor and hit that subscribe button? It helps us more than you know. And the bigger this channel gets, the more people we can help achieve financial freedom. Thank you and enjoy the episode.
The regular retail seller, they're wanting that. I mean, they think they want that expert just for that one neighborhood. Like, who sells the most houses in my neighborhood? I want to hire that person. And they're probably a good agent. I'm not going to deny that. But I think there's a huge value in an agent that understands multiple markets. And not to mention, when I was doing this, when I was buying real estate, I had to buy these deals and be profitable. So I had to know, what I could sell it for, right? Just as a realtor or a broker.
Yeah.
But as the investor, I had to wear all those hats, when I was buying for HomeVestors. And if I didn't do a good job, I wouldn't be around. So you have millions of someone else's dollars on the line. And if you're not successful with it, you're gone.
I think there's value, a lot of value in a real estate agent who is also an investor themselves, right?
I think so.
Because you understand the true cost. And I find that occasionally I run into real estate agents who doesn't understand the true cost of something and not advising the client correctly.
Yeah, absolutely. I see that all the time. A lot of folks overlook, like, for example, holding costs. So if you're trying to negotiate a deal and you got to look at your situation. How many showings are you getting? What time of year is it? And what is your holding cost? Because if you're spending, $2,500 a month just to hold this property, and you got a buyer that wants to ask for $3,000 or $4,000 in closing costs, and you don't have a line of buyers waiting for that house, you might want to start thinking, all right, maybe we should take this deal, because if we don't, you're going to spend the $2,500 no matter what. So you got to understand the ins and outs of what that investor may be stepping into in the future if they don't work out this deal. So I think knowing the ins and outs of what the investor deals with is going to make you a better negotiator.
Okay, so buyer's market is when the buyer get to put their house on the market and they sell fast, right?
I see that as a seller's market. You put a house on the market, it sells fast. That's a seller's market.
Okay, I misspoke. My apologies. Okay. The seller's market is when you put a house on the market, you sell.
Yes, very fast, yeah.
Because seller's in control. Buyer's market, obviously, is the opposite.
Yes.
The buyer get to choose. They have a lot of options, right? Okay.
Right.
So today's market, would you say is the buyer's market or seller's market?
It's a sideways market. It's very sideways.
It's a crazy market.
It's a crazy market. Every market is going to be different. I mean, I've got deals where I've got no problem selling them, and then you got some areas where you're just not moving. You're not getting any showings at all still. So it's just I'll give you an example. If you're in buying townhouses or condos, okay, and you're in, let's say, the Galleria area, or, almost anywhere, townhouses and condos I see right now, they're moving very slowly. They're just, a lot of it has to do with the insurance problems they have, and they're raising those monthly HOA dues, and they're devaluing, making it really hard for buyers to justify to buy them. So you're going to see that more of a buyer's market strongly. But seller's market, you go out to more of the country, like New Caney, Splendora, you buy something like that on maybe a half acre or just a big lot, man, you're gonna sell that thing. And it depends on your price point too. I've noticed this working in Austin and working in Houston. The price point of Austin is so much higher, really. And so that's the bread and butter. But in the investment world, we're buying deals, on the low end of Austin. So if you're on the low end, guess what? You're more affordable, and we're selling them. Everything I've got in Austin is practically gone. I've got nothing else left to sell in Austin. When I get it, it's gone. I go to Houston, and I've got a handful of properties that are just, sluggish, and they're a little bit slower because Houston is just a different market entirely. So it just depends on where you're at, if it's going to be a buyer's or seller's market. I will say what I believe, it was extremely slow last year. It was probably the slowest I've ever seen it in 2024. Fortunately, I was still very, very, very good, and I closed a lot of deals, but I noticed it being unusually slow.
So was your volume down last
It
year?
was down, yes. The volume was down. I think I still probably closed about 50 houses. And I was in the year prior to that was probably about 70 or so. So
Yeah.
that to me, that was a pretty big drop.
Yeah.
This year is going to be more than 50 already, I can tell, because it has really picked up in 2025. And so you're seeing it be more of, in that regard, a seller's market, in my opinion. But that's not going to last long. I think it's going to run its course through the spring and part of the summer. Then I think we're going to really feel it like we did last year in the fall. And that's just what I really think is going to happen. If interest rates change, that can change the whole thing. I just don't think the interest rates are going to drop enough to make the buyers, move. And that's what I think the market is doing.
Yeah, what's gonna save us is if the interest rate drop to 4% again.
Yeah, and not even 4%. I mean, if it gets into the low fives, the market's going to take off. I mean,
Yeah, that work too.
Yeah, and I think there's some big push on making that happen, but they can push as much as they want. I just don't think it's going to happen this year. It's not going to happen that fast. I think there's other things that have to fall into place, and then you'll see that. But I don't know that we'll ever see rates in the 4s or 3s again in my lifetime.
We might not.
But I think it's reasonable to see them in the 5s. I think a 5s is a healthy interest rate, and I think it's a good balance. I think it's good overall for the buyer and the seller.
Hey, thanks for tuning in today. I do have a favor to ask. If you enjoyed this video, please don't forget to like, subscribe, and hit that notification bell to stay updated with more amazing stories and insights from REBallers. Thank you so much, and we'll see you in the next video. This episode is brought to you by National Real Estate Insurance Group, a national independent insurance agency specifically for real estate investors. I personally use NREIG for my investment properties. They offer a low monthly payment option to help you to lower your cash out of pocket when buying an investment property. If you're looking for insurance coverage for your flips or your rental, reach out to them. You can click on the link in the show descriptions, or you can reach out to Jules at 816-946-8443.